Hey guys, welcome back to our YouTube channel Accounts Guru Cool. Learn accounting online. So today we are going to discuss about why the reconciliation is important and why we have to do the reconciliation every month and to do the review of that. So that's all we are going to discuss. When we are going to discuss about the reconciliations open items, we are able to know that from since how many years you can say that reconciliation items is open and not sure why the action was not taken on that. So considering we are here to discuss about R2R in action, real data review of salary payable reconciliations and open items. We have received these prepared reconciliations for the review and we are going to do the review and to see what sort of open items are there and what's the actionables is going to be on that. Preparation of the reconciliation is one thing, and on that open items, seeing the closure of that and getting the closure actionables done on that open items, that's also the one of the task. So considering that both we are going to discuss here based on the real prepared reconciliations. In addition to that, request all the viewers to be a part of membership to get in some additional benefits from there. You are able to get the access of more than 60 plus content which we have exclusively created only for the members. In addition to that, you are able to ask us to create the content as per your need and as per your requirement. So that's all. You are able to get it from the membership. So request all the viewers to be a part of membership and get the exclusive benefits from that. In addition to that, transfer your accounts and finance career today. Reach out to us at accounts.gurukul@yahoo.com for exclusive hands-on training that drives results. So we'll jump towards the prepared reconciliation and to see how we have to do the review of that and how we are going to take the actions or note it down the actionables on the open items and why reconciliation is important. That's all we are going to discuss from prepared reconciliations. So accounts Gurukul salary payable reconciliation statement as on 31st Jan 2025. This is a prepared reconciliations we have received for our review. So we'll do that. Salary payable for the month of Jan 25th, that's a 19,90,588. Payroll registers. This is match with payroll registers. Okay. So salary payable for the month of Jan 25, it means the salary is going to do the payment on this as per the payrolls and there is no any actions is going to be required because this is matched with our payroll register. Second, payable to directors from earlier months. That's okay. So there are certain salaries pending to do the payout for the directors. So when we are going to make a plan for that, that's important to add it here. Either it's going to be do the payment in which month. Second, whole salary for Jan 25th. This is also the part of our payroll registers. That's a 1,04,083 that employees put the paper and his salary is on hold. So till first three component, that's the salary payable to directors and whole salary. That's perfectly okay. So that's going to be the closing balance for the salary payable closing balance, ideally as per the books of account. But now the twist is here. Liability created in the books. So before going to discuss on that, this is salary payable for the month of Jan 25th, match with payroll register. So assuming that if we are doing the review as on today's date, that's the 13th Feb. So we have to note it down the actionables, either the same is paid or not. It means if we are showing that salary payable, so subsequent impact of that, that's also is important to do the analysis. So salary payable, so either that's all paid or not. That's also the important one. Payable to directors, that's the reason it's mentioned. So when we are going to do the payment of that, what's the plan for that? That's also the important one. And plus, either this payable to directors is accurate as per the whole salary of directors. That's also is going to be the important one. Resign, that's okay. We are going to do the full and final settlement for this employee. Now this one, and why the reconciliation is important. Liability created in the books but pending for payment. This is something we have to take it more serious. That's liabilities created in the books, but pending for payment. That's a 51,086. So we have created the liability in the books, but we haven't done the payment for that. And what's the reason? If it's a whole, that's okay. But why we haven't paid for that? And from since how many days that's open in the system? That's also the important. We'll jump towards the annexures for pending for payments. Now, if you see, we are in 2025 and these open items pertaining to March 23, September 23. So it means for 23-24, audit also has already been done. And now when the reconciliation is prepared, so we are able to see that salary payable created for the month of March 23 for employee, that's a SP, that's a 23,250 is still that's open in the books of account. So when the audit been done for the financial year 22-23, might be obviously the audit close maybe by end of September or August 23, but still no one taken care for these open items. 20, the provision is this liability was created in 2023. So 22-23 audit has already been done in 23-24. Again, 23-24's audits been closed in 24-25. And now we are going to close the 24-25 as well. So it means that this is the one which is important for us to have a more clarity from the R2R standpoint. How you are going to do the review of reconciliations. Why it's important for every month to do the review of reconciliations and why the balance sheet reconciliation is important. So the balance sheet line items, whatever the numbers is there in the balance sheets, that's going to carry forward towards the next year. And that balance is going to carry forward year on year. It's not like the P&L that's going to be expense of and net balance is going to transfer towards the balance sheet towards the retained earning. So now if you see here, when the reconciliation is prepared as on 31st Jan 2025, it is observed that there are certain open items in the reconciliations on that no one has taken care any to do any actionables towards that. So salary payable from the 23 to till 25, 23, that's a 24, 25, 23, 24, and 24, 25 also is going to end, but still no one cleared that open items. So this is something is more worried, and that's important. It's going to be says that if you have the prepared reconciliations to see the closure of that reconciliation, that's also the equally important as good as preparation of the reconciliations. So having the reconciliation in place plus do the actionables to see closure of open items, that's equally important. Now what we have to do for this and why the salary has not been processed for liabilities created in the books of account, what's the reason for that? That we need to gather the informations for that. That's probably the reasons is going to be if these employees left the organizations and they haven't asked back for payment. But if anyone put the paper, put the resign from that profiles, definitely he is going to ask the payment for that. Then what might be the scenario for that? Just we are discussing for that. We don't have the confirmations. We need to ask the confirmations for that. Might be the absconding case of the employee, and that's going to be the 100% is probability going to be more accurate with accuracy. Might be these employees left the organizations without serving the notice period, but accountant created the entry for that, and finally they took the call not to pay for those employees, or absconding scenario, salaries created but the employees absconding by end of that particular month. So the salary uh, hold for that employee and took the decision not to pay for that. So what's the reason for that? Since if that amount is correct and that's going to be that's the actually payable, so I'm not sure. I'm sure that employee is not going to wait for that, and it's from the 23 to 25. So need to gather the information for this. Why the salary has not been paid since 2 years. And what's the reason for that? That we have to identify. We need to ask for the respective team to provide the clarifications for that. And if the employee is absconded, then why we haven't reversed that expenses in the books of account? And now how we are going to do the closure of this? If the scenario is going to say is that yes, uh, those employees absconded, then we have to initially we booked the expenses and we created the liability. And now, uh, assuming that these amounts we are not going to pay, then we have to debit salary payable. We are going to do the debit to liability and credit to expense written off. Expense written off is going to hit to our P&L towards the credit sides as an other income. So if you have created any expenses in earlier year and created the liability for that, and now you're not going to pay for that, so you have to do the written off of that liability and show that as an income for us. So that's the entry we have to do in the system to see the closure of liability created in the books, but pending for payment. And that's the reason the reconciliation is going to be important to perform every month and do the review of that. Second, salary paid but expenses not booked. Very strange. Salary paid but expenses not booked and liability to be booked. So it means this salary is paid but liability is not created in the books of account. So without creating the liability, the amount has already been dispersed or paid to employee. So the process is not following here. We have to first book the expenses, create the liability, and then we have to do the payment. But here, before going to create the liability, this payment has already been done and liability is not created in the books of account. So you insure from the bank side, so banks is matching, but from the payroll, from the salary payable, that amount is not matching with what's actually payable as per your payroll. And why? Because the salary paid for the 67,379, we paid to employees, but we haven't booked the expenses in the books of account. Fortunately, still this financial year is not closed, so we have the scope to take this in the books of account as an expense. So the actionables is going to be the director salary short book for 200 and salary is not booked for XYZ. So we have to take the entry for that. We have to book as an expenses and create the liability. So that's going to be adjusted towards the salary payable. In addition to that, if any other compliances belongs to that, if the salary is payable 67,179, what's the impact towards the profession tax reductions, PF reductions? Either that's how that's closed and either that also is open in the books of account. So that's all is going to be do the review in addition to this. So one, if it's open in the salary payable, it's saying that the salary is not booked in the systems. Then when we are going to do the accounting entry for that, then what's going to be for other deductions? And considering that that impact is going to be for that particular ledgers as well. That's going to be statutory compliances. So that's important for us. And because of this, we have to do the reconciliations for every month and we have to do the review. And in addition to review, we have to ensure the closure of open recon atoms. That's important. So the entry is going to be, so we are going to book the expenses and create the liability, and liability is going to adjust against the paid amount. So this is also is going to be the one of the crucial open items on which we have to took the actions, or we have to take the actions immediately. So if you see now, so salary payable is 19 lakh 90,000. This is for the hold payable to directors. That's okay. And this is 1 lakh 4,000. It's a hold and director salary and salary payable. That's a total is 28 lakh 69,000. This is the actual liability for us. And in addition to that, these two, that's a 16,293. That's liability created in the books but pending for payment. This is also is going to do the reversal or need to do the payment. This 67,000, we have to book the expenses. Then what's the revised balance is going to be salary payable. So this is our actual balance as on date as per the books of account 28 lakh 53. So when we are going to do the impact of this liability created in the books but pending for payment. So towards this, we need to check why the salary has not been paid since 2 years, assuming that we are not going to do the payment. So it means we are going to do the debit of this, that's a 51,086. So our salary payables is going to reduced from here. Second, the salary paid but expenses not booked. So when we are going to book the expenses, salary payables is going to increase. So this is going to be the part of credit. So now the revised balance is going to be, so 28 lakh 69,000, and this is the 28 lakh 69,000. 1 minute. Yes. So after doing the actionables of open items, how your revised salary balance is going to be. So ideally your salary payables is going to be 28 lakh 69,039. How? As on date, it's a 28 lakh 53. Liability created in the books but pending for payment. When you are going to do the entry, so we are going to debit to salary payable and we are going to do the reversal, debit the salary payable, and we are going to credit towards the other income. So this balance is going to reduced with 51,086, and the salary paid but expense is not booked. So when we are going to book the expenses, we are going to credit to salary payable. So this is going to add. And by doing all these things, the revised salary payable balance as per the books of account should be 28 lakh 69,379. Out of that, 19 lakh is payable as per the payroll. 774 we have hold for directors, and 1 lakh 4,000 also we have hold for that particular employee. And if you do the total of this, that's a 28 lakh 69,379. So that's the way we have to do the review of prepared reconciliations. We have to ask the further clarifications on the open recon items, and we have to give the instructions what actionables is going to do to see the closure of that open reconciliations items. That's also the important one. And what's going to be the revise our salary payable, or what's going to be the revised balance after consideration of the impact of open atoms. And it's mentioned as like preparation of the reconciliation plus doing the closure of the open atoms. That's the two things is equally important. Only preparation of the reconciliation is not going to solve the purpose, but preparation of the reconciliation plus ensuring the closure of open atoms, that's more important. So we have to ensure in a that way, we have to do the review of prepared reconciliations from the R2R standpoint or from the reviewer standpoint, and see what open atoms are there and how it's going to be close and what's actionable is going to be. And then we have to guide to the team to do the impact, take the impact in the books of account and see the closure of all these open items. So that's related to salary payable reconciliations, what's prepared. That's the R2R in actions, real data review for of salary payable reconciliations and open items. Thanks guys for being with us, and I hope you got more clarity to us. That's how you're going to do the review and how you're going to see that items is going to be closed. That's what we have discussed here. In addition to that, request all the members to like, share, and be with us to get more insight about accounting and finance. In addition to that, if you guys are looking for any sort of training related to accounting and finance, then you can reach out to us at accounts.gurukul@yahoo.com. Thank you.